A new report out of China showed the sharpest decline in that country's exports in 2 years, compounding concerns about slowing global growth. And then you add to that a report from the Organization for Economic Cooperation and Development that also pointed to a further slowdown in the global economy this year. And you had a pretty cautious Monday as a result on Wall Street. The Dow fell by 86 points, closed at 23,909. The Nasdaq was down by 65. The S&P slid by 13. Eunice Yoon starts us off tonight from Beijing.
China's latest trade data reaffirms that the economy here continues to decline. December export as well as import figures missed expectations. Exports dropped 4.4% from a year ago. Analysts had expected it to fall to a 3% rise. Imports shed 7.6% versus a forecast of 5% growth. China's trade surplus jumped to $57 billion. Exports to the U.S. in particular slid 3.5%, and the surplus with the U.S. for the year was the highest on record going back to 2006. A few important points from the data. The tariffs are hurting exporters. Companies front-loaded orders, which probably will taper off. Demand globally is softening. Shipments to the U.S. were the only ones affected. Exports to Europe and Japan also fell. Domestic demand is struggling more than expected, despite efforts by the authorities to stimulate growth. Expectations are that Beijing will have to speed up its policy easing and other measures to boost the economy, and that President Trump could use the record trade surplus to pressure Beijing as part of the trade negotiations. For Nightly Business Report, I'm Eunice Yoon in Beijing.